A last-hour recovery on Friday helped the sensex and the nifty see a recovery in late trade. Of course, the FIIs have now returned back to the market in a big way. Hello and welcome to Editors Roundtable. We've gained for the third straight week with all indices ending in the green and ending higher. And lots to talk about. The auto segment has come back. Some really good earnings coming through this week. So we'll get cracking with our editors. Folks, how are we guys feeling about the market this week?
Oh, absolutely good. Sonia, Sensex is within 1% of all-time high, and almost daily you see this pattern. The market has a gap up, then through the day does nothing. In fact, consolidates, declines, and then at 3 p.m. there's a miraculous rally every day. And that's because you're trusting the market to have a gap up next day once again, rinse and repeat. And unless something major happens, look, I mean, even after all the hawkish commentary from the Fed, 75 basis point, and Powell saying that we need to do more, we can over tighten and all. The market that day actually came back in the green. It just tells you the remarkable strength of the Indian market.
I'm coining a term for this market, Teflon coated market. I mean, I think, and by the way, I think the highlight of the week was the Fed decision. Yeah. But the way it happened, right? I think Anuj was up that night. I was not. I mean, I used to stay up during the global financial crisis. I've stayed up many nights, but this time it was...
Anuj, you know what? I think your bloodshot eyes today you're worried about is because you were up that night. You should get your full night's sleep.
I normally don't. Remember I had told you that Kavita also, that poetry also, that about not waking up in the night. Exactly. So I normally don't. But that night, just something, something told me that, just stay up. Something big is about to happen. And I'm telling you, just, go and watch that on repeat on CNBC. And I think... I've been doing this for 20 years. Every day you learn something new. Yeah. And that day I learned something new. I mean, it didn't look like it was the most matured US market. And, it looked like, if you see the chart of that Fed funds futures, it was behaving like a mid-cap stock. It was behaving like a small-cap stock. Yeah. Hey, this is a crazy market, Sonia.
Absolutely.
Go to YouTube. The timing I was told, somebody called me and told me, market participants, please watch it 12 to 12:50. Absolutely entertaining television. And of course, the moves were, really, really crazy all over the place.
But one thing that really stood out this week, Prashant, and I want you to take that forward, is how amidst everything, right, the market has been resilient, stood tall, held on to 18,100. As they say, the cleanest shirt in an otherwise dirty laundry basket.
Oh, absolutely. Dirty neighborhood, whatever you want to call it, right? But Teflon coated really, because the market is just refusing to... You throw anything at the market and the market is just kind of rallying on. So let me just make a few points. The Nifty now is just 2.5% away from a new all-time high at a time when the Nasdaq is at year-to-date lows, almost at year-to-date lows. I mean, this is quite incredible, which means that the Indian market has now once again regained the #1 spot as far as year-to-date returns are concerned. We just discussed, the Fed chair did a Jackson Hole once again, and markets rallying is something which I guess the Fed does not like, because markets rallying is financial conditions easing. And when it rallies too much, and if you sort of watch that press conference, there was a question thrown to the Fed chair Powell. And the question was, you made this decision, markets are rallying, and right on cue, he came in and smashed the market after that. He said, well, rates are going to be higher for longer, et cetera, et cetera. So it's not a great setup if you are outside of India, but in India, of course, as I said, there is that coating which helps us. The current market pricing for the US also, everything sort of said and done, is only another 75 basis points in terms of hikes. This is market pricing of what the Fed will do, which means that the bulk of the hikes are already behind. They're not ahead of us, which is important to note. Markets are forward-looking creatures. They're not backward-looking creatures. We've seen 500 basis points of rate cuts in the last, 10 months or so. The question, though, is how long can rates remain higher? Will it be for much longer, later into the second quarter, third quarter of next year? And I think that is something which we will watch out for. But if markets are forward-looking creatures, you tie that in with flows. Dedicated emerging market flows have seen the highest weekly inflows. This is EPFR data in the past 7 weeks. Some $3.5 billion has come in. And of course, we've been recipients of some of that as well. All of this means that the Indian market especially has a shot at all-time highs, as I said, just 2.5% away. As of Friday, we have left exactly at the recent swing highs, which is 18,179 or so, a little lower than that. And I think if this level is taken out, you've got a real shot. 2.5% is nothing. It can happen despite all of the challenges which have been thrown our way. You want a range on the lower side, I think it stands at about 17,900. On the upside, I think that level is about 18,200 or so. So, really a lot happening at this point. Anuj, the other point is ownership, right? This is, and you've highlighted FII versus local positioning in futures and options segment, but you got some interesting data on ownership. How much do locals own of the market and how much do FIIs own?
Absolutely. But before that, since you referred to Powell smashing the markets, I think, I don't know, I heard someone said that did Mr. Volcker's soul came into, Mr. Powell? Because, if you see, Volcker was the tallest Fed chairman. Yeah. After that, consistently, the height of the Fed chair kept coming down up until Janet Yellen. And then, and the tone kept becoming dovish and dovish and dovish. All of a sudden, comes, yes, the rates kept falling. The rates actually have kept in pace with the height of the Fed chairman. And it sort of bottomed out with Janet Yellen. And now comes Mr. Powell, who obviously is not as tall as Mr. Volcker, but the rates are back up. Anyway, that's on the lighter note. I mean, look, we become too, fascinated talking about the market on a day-to-day basis and on a positioning basis. The real wealth is made in the long term, right, in the stock market. Now, this is a very interesting tweet that I came across, and this gave me the idea, actually, for today's discussion. The FII versus DII equity inflows. This is cumulative US dollar. In terms of billions. Now, CY11 to CY16, it's all FII. $66 billion FII inflow, and DI is actually sold about $7 billion. Then CY17 to 22 happened, in which the DIs really took over and matched FII, 77 billion versus 22 billion. Actually, 22, it's actually $41 billion inflows for DIIs and only $4.8 billion for the FIIs. I just thought that, let me see in terms of individual stocks, what has that meant? And I didn't slice and dice the data just to suit this narrative. I just randomly took 5 or 6 stocks. I started with SBI. SBI's shareholding pattern in 2017 end, the mutual fund ownership was 10%. It's gone up to now 13%. FIs was 13%. It's come down to 10%. Look at ITC. The mutual fund holding was 5.6% at 2017 end, which has gone up to 9.6%. While the FI holding has come down from 18.6% to 12.4%. Look at ICICI Bank. The FI holding is down from 48% to just about 44%, and the mutual fund holding is up from 22% to 28%. Infosys, the FI holding was 35%, it's come down to 31%. Look at the mutual fund holding, it's gone up from 10% to nearly 18%. And just look at Maruti, I mean, just signifies the kind of buying that we've seen, especially in the domestic-facing stocks. The mutual fund holding has doubled from 5.5% to 10.5%, and the FI holding is down from 26% to 21.8%. Now, I didn't add the insurance data, because if you add that, then you will notice that actually DIs now, in some cases, own more than FIs. Slowly, steadily, but surely, we are taking back some of the ownership from the FIs. The only thing is that the FIs managed to get in really cheap when the liberalization happened, and so they can sell a lot but still be sitting on a large amount of money.
Rhythm was here when the last time he was on. That's very interesting data, Anuj, by the way. He basically made this point that FII, I mean, you said, I think the last bar was 3 years, right? Last 3 years, $41 billion. I think Rhythm made the point since 2014, FI inflows is reduced, but FDI inflows has gone up substantially. And this was very different the 10 years prior. So interesting data. But I think Nimish is going to tell us that FIs are going to come back.
That's the feedback. That's the feedback, Prashant, that there is a lot of global capital which is almost looking to reallocate into India. If you look at the headlines in global newspapers, I was talking to some large sell-side sales heads who have been to US and Europe for road trips. And the overall feedback is there is a lot of money on the sidelines to come back to India. People are moving out of China, people are moving out of Europe and looking to invest into India. So India in that way is a shining market, so to speak, for the global investors as well. So, and that's clearly showed up in this week as well, like the FIs have turned net buyers and looks like we are poised for a breakout. You spoke about 18,150 or 18,170 as a level to watch. I think above 18,300, you'll see a big breakout on the Nifty, and that will be held by the Bank Nifty as well. So, while, for this week, if you see the Nifty has been range bound, just 1.5% up. But in the context, it speaks for itself that, even with such a hawkish tone, global markets not supportive, we are actually up 1.5%. But look at the broader markets. That's where the big action was this week. Nifty is not giving you a right picture. As I've been saying, earnings are giving a lot of reactions to individual stocks. So if you look at positive reactions to earnings, today Amara Raja was up 10%. We saw Dalmia Bharat up 10% in 2 days. Cement stock, just small bit, and you saw a big reaction to that. M&M Finance was a big reaction. On the other side, look at Bandhan Bank, just weak numbers and the stock shaved off 10%. Likes of LIC Housing, Voltas was down 5-7% this week on bad numbers. So there was a lot of reactions to individual names in this week because of the earnings. The big number that I've picked up, I was talking to some large investment bankers, and the feedback is just watch out for a large inflow, both FDI and FII put together. The number I'm told is close to $50 billion.
Wow.
That's a big number to watch out for. So it will be not only FII money, but it will be FDI money as well. But that can have a big impact on the Indian markets, and that's why I feel markets are poised for a breakout in the very near term. Also, if you look at the primary market activity has picked up. There are 7 IPOs lined up in the month of November. Also, both you will have been highlighting that there are 10 stocks where their lockups will open in the month of November. So a lot of liquidity event to watch out for. But I guess the big takeover for me was there is a lot of global capital looking to come into India, and could be $25 to $50 billion of FDI and FII money waiting on the sidelines to come into India in the next 1 month.
Knows
So
which stocks this money will go into also, but it's not telling us.
that's something we should avoid.
I think what stood out for me is that these sales heads are going to Europe and US for road trips.
People have started.
I want to go for these road trips.
These are all marketing tips. People are going out for blogs, for deals. So there is a lot of action, Sonia, in the market. There is so much of appetite from.
By the way, I got a sneak peek into that list.
There's a large PE investor who's invested in the company which runs the seaplanes in Maldives. And they do all their meetings there. So, if you want to feel a bit more jealous.
One day we'll get invited for those meetings in Maldives, right? But I have a big story that I'm tracking, which was in the auto sector this week, and it was a return of growth in the domestic two-wheeler manufacturers. So I'm just going to take you through some data, and this is very interesting because, as we know, the two-wheeler space has been in a slump for a very long time. But now the data indicates that the last 3 months there's been a significant return of growth in this space. So the 3 manufacturers that I'm looking at, one is Bajaj Auto, there's TVS Motor, as well as Eicher Motors. Let's start with Bajaj Auto. From an average of around 1 to about 1.8 lakh units, all the way to 2 to 2.5 lakh units. This is just the domestic sales that I'm talking about. And Bajaj Auto is not alone. It has both TVS as well as Eicher for company. Just look at TVS Motor. It's been by far the strongest stock in the auto basket. And from an average, once again, it was languishing in about 1.8, 1.9 lakh units, all the way to about 2.75 lakh units. The best of the lot by far has been Eicher Motors. We've seen the Royal Enfield sales. We've seen the Hunter sales have been phenomenal. Here's the monthly trend. Just look at that. It's a big bump up that we're seeing. So that's the big theme that I'm talking about, the return of the domestic two-wheeler manufacturers. Now, a lot of brokerages this week raised their earnings estimates and their target prices on the stock. There were 2 upgrades that came in on Bajaj Auto, Morgan Stanley, as well as Goldman Sachs. There's an upgrade to an overweight. Now, the reasons cited are that the worst of the export pressure is now behind us in terms of two-wheelers, and there's a very strong portfolio of brands, and premiumization is the big focus area. So Pulsar, KTM, the new Triumph that will launch in 2023. In fact, CLSA also raised their volume assumptions 4 to 8% over FY23 to 24 due to a strong festive season. So a lot of brokerage upgrades coming in over there. Apart from that, Hero MotoCorp is the only one that's been lagging. But in their conference call, they also mentioned that there's a clear trend towards premiumization. They're building a strong pipeline of premium products. And then coming to Royal Enfield, where the new Hunter has seen exceptional response, as well as, some brokerages going ahead and raising their estimates for Eicher Motors. So this is the big theme that we're talking about, a revival of the domestic two-wheeler space. And Nigel, I know you're itching to come in on this. So I'm going to toss it back to you. The new Meteor, there are spy shots that have come out of the new Meteor. Of course, the Hunter has done exceptionally well, and domestic two-wheelers are back. So which one are you buying next?
Sonia, when you have an Interceptor, you can't look at the Hunter, right? That's going to be too lightweight, I think.
Okay, Prashant, what about you?
The one aspect, this is not exactly two-wheelers, but four-wheelers especially, right? Maybe two-wheelers as well. The fact is, interest rates are going up, and somebody I was speaking to said that usually it does hurt, but it's not hurting now. I don't know, you can weigh in, Sonia. Is because for the last 2 years, first of all, people could not buy. There were lockdowns, etc. And now there was no delivery. Especially in the car segment. Yeah. So while rates are going up and they've gone up quite a bit, this may continue, and the run may continue. These macro things may not hurt too much at the margin.
Correct. In fact, the entire rate piece has to be looked into because it's going to have an impact going forward, whether it's real estate, whether it's autos, even for NBFCs. I was reading a report from Goldman Sachs yesterday, and they said they are expecting 100 basis point hit, incremental cost of funds to go up, and that would mean 10% hit on earnings. So there is going to be that challenge going forward of rising interest rates. And I guess that's the best time to look at banks as well. Banks has been the big outperformer.
And
numbers have been quite
right?
strong, and Nigel has put out a good piece. So Nigel, take it forward.
Well, it seems that the PSU banks, they believe that their time is here. And in 2022 so far, everyone's talking about a resilient market, right? The Nifty is more or less resilient, holding with gains of around 1% to around 2% or thereabouts. We just take a look at the Nifty PSU banking index. That's in a world of its own. And it's been a big outperformance that we've seen coming in from there. And there are valid reasons, right? At the start of this fiscal, we had data that came out that said that the gross NPAs, well, they had declined. The capital adequacy ratio as well, indicated that these banks are well capitalized. Keep in mind, in the last couple of years, they've raised close to around 1.5 lakh crore, and they're well capitalized for the next few years. Well, that's good news for the government. That's good news for shareholders as well, because now these banks are poised for growth. And they've backed that up because, if you look at the past quarter's numbers, well, they have been giving you one story. That is, loan growth is on the rise, which is pretty good news. The other factor is, looks like they're gaining some market share. And this has come with employee costs being more or less flattish. So the operating profit as well has been improving. Let's run you through a few banking names that joined us, and the commentary has been very positive. Karur Vysya Bank, well, remember their net NPAs were around 5%. It's come to around 1.4%. The management says it'll come down even from here. Canara Bank, they said that they're going to grow well in the next couple of years. The NIMs are going to be maintained. And they're saying the gross NPAs, well, it could even come sub that 6% odd mark. So that as well is quite encouraging. PNB, they went ahead and they upped their loan growth guidance. And also the management said here on CNBC-TV18 that FY24 is going to be a golden year. Let's see whether or not that happens. And finally, Bank of India, they as well followed suit. They revised their growth guidance for the year. And they've also said that things will improve, particularly on the corporate book side, which is pretty encouraging. But why is the banking space a consensus buy? Well, initially, as rate goes high, well, it's positive for banking names. And the PSU banks, their liability franchise is pretty strong. So that holds them in good stead. The loan growth is picking up. The worst of asset quality is likely to be behind them. And also these banks, as I said earlier, they're well capitalized. So with corporate India delevered, well, it seems that if CapEx is going to pick up, well, these banking names as well could gain. Finally, what stands out for the PSU banking names is they are still trading at sub 1 price to book. And the street believes that this is still attractive because they are larger peers. That's the private banks, well, they are trading at around 2.5 to around 3 times odd. So the valuation argument is in their favor. Let's see whether or not, now this time around, they're flattering as of now, but will they deceive? For the time being, the street believes that they're in for a good run, which explains their outperformance. Back to you guys.
Okay, Nigel, thanks for that. It was indeed the big theme, right? UCO Bank telling us that after many, many years, corporate profitability has gone up and corporate stress has gone down. That's the big takeaway. So what we'll do is we'll take a quick break. On the other side of the break, Saurabh Mukherjee will be our guest and we'll pose all of these questions to him. Be back in a bit.